All right. So this is something I saw that just seemed to ring true with me. Sweetwater County, Wyoming, I was driving through, and there's a big banner out there that says, vote for the lodging tax. And the bottom line is the tax you don't pay that benefits us all. I just thought that was quite interesting that they would actually be that honest on a banner. So the first part of this is going to be a little bit of review for those of you who have sat through an entire Wayfair presentation. For those of you who have not, hopefully this isn't news, but we'll fill in some of the gaps for you. So way back in 1992, the Supreme Court said that we had to have physical presence in a state in order to be required to collect their sales tax. And it had to be more than just a little bit. It had to be something substantial. And over the years, states interpreted that to mean making deliveries in the state with your truck, salespeople knocking on doors, trying to make sales, some form of presence in the state, whether it be through employees or property. And that was our world. If you never left home, if you never left the city of Eden, South Dakota, well, you'd only ever need to collect South Dakota sales tax. Then on June 21st of this year, the Supreme Court, they kind of turned our sales tax world upside down. They said that a state requiring a retailer who has derived more than $100,000 in sales or 200 transactions from a state, that retailer, if the state requires that particular retailer to collect their tax, even though they have never visited that state, that once the retailer has that kind of volume in a state, this is not a burden on commerce. So what this comes down to is physical presence still exists. If you drive into a state, make a delivery, you have physical presence, and you now have a requirement to collect sales tax. But what also exists is if your sales get over a certain volume, a state can require you to collect their tax even though you've never left home. So who is a remote seller? Well, let's take a look here at the fine establishment of Snow's Barbecue. They're in a little tiny town in Texas, population maybe 1,000, 1,500. They're only open 4 hours a week. They open Saturday morning at 8 a.m. and they close when they sell out of their barbecue, usually before 8 a.m. Now this just looks like a restaurant in every way, shape, you know. People are lined up to get in. People start lining up to get in at 4:30 in the morning. So this, is this person a remote seller? Well, let's take another look at them. Okay. Here they are, running the smokers out back, building some of the #1 rated barbecue in Texas. All right, are they a remote seller? Well, there's things to consider on a remote seller. And the name remote seller pretty much says it all. It's somebody from somewhere else selling their product. Another way, so a remote seller is someone shipping product. If a business has a UPS or a FedEx truck that shows up almost daily, it's a pretty safe bet that they are a remote seller shipping their product into other states. You can be a remote seller if you're using the telephone. You can be a remote seller if you're still selling via the fax machine. A remote seller is anyone shipping product to another state in which they do not have a physical location. Oh, is my PITMASTER a remote seller? I mean, this looks like a pretty low-tech operation. But then we go to their website. And I've highlighted some of the important bits. You can order online. You can use their phone at the upper left. The email in the upper left looks like some Facebook and some Twitter. They have a shopping cart. You can click the big button right below our PITMASTERs there, and they will UPS overnight you the best barbecue in Texas. Ordered on Saturday, you'll probably have it Sunday morning. So it's time for polling question number 1. Pitmaster or remote seller? Are barbecue people remote sellers? Perfect score. That is correct. They are a remote seller. Even though they maybe don't look like it at face value when you walk up and stand in line, they are a remote seller. As are most dealerships, implement dealers, heavy machinery dealers. It's an easier connection to think that you might be a remote seller, but this goes for car dealers as well. And I'll bring that up here a little bit later, and it has to do with what's going out of your parts department and with the drop shipping of vehicles. So the first question that comes to mind is, oh my goodness, do I need to register in every state? Hopefully not. When the Wayfair decision came out, states slowly started jumping on the bandwagon. I believe we're up to 38 of the 45 states that charge a sales tax. These 38 have all passed some law or another or statement on their website. And there's lots of varieties, but we kind of got them grouped down into 4. There's the or people. These states say typically if you're doing 100,000 in sales into their state or 200 transactions, and a transaction is an invoice. There's a few states with a different threshold. We've got the and states and the gross dollar states. We lump them together. There's a couple of states that say it's $100,000 and 200 transactions. I could have $500,000 worth of sales, but only 50 transactions, and I would not have crossed their threshold. You have to do both. And there's a few states out there that just threw out a dollar value, 250, 500,000. The choice states, that's where we're going to spend the time today after we go through the basics of the Wayfair decision here. States say you must collect our tax, or we need you to do all of these different things and notices and reports and changes you need to make to your websites. Those are the choice states. And I've got a couple that we just couldn't categorize. We put them in the unique section. So there's 4 basic types. And let's look at our or states. Pretty much, at least in the first page of the or states here, you can see they're all dropping in that $100,000 in revenue, 200 transactions. Don't worry about writing the numbers down. I'll show you near the end of the presentation where you can find all these things on eidbailey.com. Some more of the or states. Texas is proposed that 500,000. New York had an existing law out there at 300,000 or 100, but most of them are falling into that 100, 200 group. The gross sales states, Alabama has put out there that if you make over 250,000 in sales into our state, you need to be registering. California is rumored at the 500,000 threshold. There was something on their website, then it disappeared. We're waiting for some final rulings there. Ohio is challenged in court yet, and that's going to be just a matter of timing until the courts get it cleared up. But so we've got these few, half a dozen gross sales states. They don't care how many sales you made. It's just, did you cross the dollar amount? The and states, Connecticut and Mass. I'm surprised by the and statement. You would think that they would want to pick up all of these smaller transactions. Perhaps this will change. Got a couple of unique states here. Idaho, their rule reads that you must have an in-state person sending you the sales. We're really not too sure why it's this way. If it's some version of a click-through NEXUS that they were going, where if there was a person in Idaho referring people to your website so that the sale was getting made, we're not too sure if it has to do with once in a while, if you're in a shopping mall, you might see one of those mattress stores where you go in and try out the mattress, and then they tell you to go online and order it, and it comes via truck from some other state. So Idaho, we're not too sure on. That's one I'm expecting to change the next time their legislature meets. Minnesota's a little odd on its own. If you have 100,000 in sales into the state, that you had to comprised of 10 or more transactions, or just 100 transactions in the state. So if you had 100 small transactions, you would be required to register. If you had 5 large dollar pieces of machinery sales, could be $500,000, you technically haven't crossed the threshold. So I've gone through the ors and the ands, the dollar amount ones and the uniques. And the interesting thing is most of these states, when they passed their statutes, they called out gross sales. Not wholesale sales, not retail sales, they just all sales count towards this number. I had some questions a while back regarding drop shipping of automobiles. Well, especially if you are supplying a fleet or you're supplying a rental car chain. Now, you could be drop shipping a lot, government bids even, drop shipping a lot of vehicles into states where you'll never see them. Some states have a sales tax on vehicles, some states have a motor vehicle excise tax. Just out of curiosity, I began to wonder, will these vehicle sales count towards the gross sales? We understand that when the vehicle is plated, the tax part of it, of the vehicle sale, is taken care of. But does the vehicle sale count towards the total? I submitted that question to about a dozen states and got a complete mixed bag of responses. Some said it didn't, some said it did. So if you're drop shipping a lot of vehicles, especially into certain states, this is something that we should visit and see. Because if you're drop shipping vehicles into the state, yes, they're getting taxed when they're plated. But what about the activities of your parts department? Are you like a Scoggins Dickey and you have a massive online presence and you're selling parts? Are you like my local Lincoln dealer who is selling parts on eBay? Are you hooked up with the Ford Parts website, where someone like myself can go to fordparts.com, look up the part number for my F-150, and I can order it through there and it gets shipped from my nearest dealer? Your vehicle's drop shipping may be pushing you over the threshold. And then we should look at how much volume is your parts department doing. And this can also be if you're providing crash parts. Some dealerships do a real good business in crash parts. Sometimes they have a route truck that's already created physical nexus. Sometimes they're just shipping things out. And we're gonna lead, I believe, into another polling question. So this is a steakhouse off in the middle of Texas. And you drive through the cattle gate, The sign out front says cattle buyers go right. Those of you wanting dinner go left. Could he be a remote seller? Well, I was later informed that this particular steakhouse does a huge business around the holidays, shipping out fully prepared at $125 a piece, peppered beef tenderloins, next day FedEx. And they sell, unless this number was hugely exaggerated, thousands of them throughout the holidays. They cook them, box them, overnight them. That leads to our polling question. Is a steakhouse, which is on its face value somewhere to have a good steak, can they also be a remote seller? True or false? They are a remote seller. They may never leave Texas, but they ship those beef tenderloins all over the country through their website. People call on the phone and order them. These folks are a remote seller. The choice states, this is where I believe we need to spend some time. Reporting or collecting. Many states, this was kind of before the Wayfair decision was made, when Colorado got a decision pushed through the Supreme Court, where it's legal for them to pass a law. They may be posted on their website. That's what all the marketing of this new law that they do. And they say, we have this very complex reporting scheme. If you're over a certain dollar amount of revenues from our state, you have to do all these different things. Or, if you don't want to do all those different things, you can collect our sales tax. We'll let you do that. Let's see what those different things are. Washington said, if beginning January 1, 2018, if you had over 10,000 and here they actually say retail sales to Washington, collect our tax or follow the notice and reporting requirements. Well, what are the notice and reporting requirements? It can't be that terrible. The notice and reporting requirements are, you need to have a notice on your website that's very specifically worded that says, in effect, we do not collect Washington sales tax. You may owe use tax to the state of Washington if you are a resident there. Then you are expected to have a similar form of the verbiage print out on the receipt, whether it's a digital receipt or the one that's in the box that says, dear Washington resident, we did not collect your sales tax. You may owe use tax. And then after the year end, you are to send, in effect, a statement to your purchasers that says, these are all the different things you bought from us this year. Well, we didn't charge Washington tax on them, and you may owe Washington tax. And a separate form has to go to the Washington Department of Revenue. There's a lot of opportunities there to get it wrong. And what happens if you get it wrong? Well, I'm sorry about this. Let's just take a look at Colorado's. Colorado's actually began in 7/1 of 17. It's 100,000 in sales. They have a requirement for invoice language, an annual summary to the client, and an annual summary to the state. You can do all those things, or you can collect my tax. Well, Colorado holds out that for every time you get one of these things wrong, there's this fine amount. So you forgot to do the annual summary to the state. That is a $10 fine. Not for the form that you missed, but as I understand it, for every name that should have been on that form. Annual summary to the client, I believe, was just per purchaser, it was per person. Invoice language, $5 for every invoice it wasn't on. And then about a month ago, so we had a choice. Beginning, as this year was going along, we could report or we could collect their tax. Now the Colorado Department of Revenue comes out with a news release and says if your sales in Colorado exceed $100,000, you must register and collect their tax. Well, wait a minute now. Here you told me if I was over 100,000, I had to make a choice to collect the tax or do the reporting. True. Now they've come out and said you have to register by end of November to collect their tax if your sales are over the limits. Now that's two sets of rules in 1 year. That's where this timeline comes in. If we look at that top set of arrows, that's my year, beginning to end. The second row of arrows, if I was over the 100,000 threshold, I needed to make a choice in that first stretch there. Was I going to collect or report? Well, I'm over. So now they're telling me everybody's got to register by 12/1/18. I have yet to see anything where Colorado has come out and said, yeah, don't worry about those year-end reports that were due. Thank you for registering because we told you you had to, and thank you for collecting our tax beginning 1st of December. But they haven't put anything out there saying you do not have to do the year-end reports, which means to me, you do need to do the year-end reports for that period when you should have been complying with the reporting requirements. They have not said that the fines will not apply, which to me means the fines still apply. If you're falling into that bracket, you should have been doing reporting. You've now been forced to register because of the December 1 new deadline. Don't forget about those year-end reports to the customers and to the state. But until they tell us otherwise, they are still due. Georgia just came out with, at the beginning 1/1 of 19, if your sales are over 250,000 or 200 invoices into the state, they have a reporting scheme. Same deal. You can either do all these things or you can collect our tax. A fine scheme very similar to Colorado's. For an implement dealer who's maybe sends 5 pieces of equipment to the state, probably not that harsh a fine if you forgot to do it. But what about the person selling smaller pieces on eBay, Amazon, or over the phone, where there's lots and lots and lots of $50 and $60 transactions? This could become very painful. Pennsylvania, they came out and said March 1 of 2018, this year, if your sales are over $10,000 into my state, even though you've never been here, we need you to do all of these things: the website notice, the invoice language, the annual statement summary to the client, the annual statement summary to the state. We need you to do all these things, or you can choose to collect our tax. Their statutory minimum fine is $20,000. You could have had a $15,000 sale into the state, and if they catch you, the statutory fine is $20,000. What I am really curious about is if we begin to look at it from, there are sales tax auditors from Pennsylvania auditing businesses in Pennsylvania. They come up with a couple of large invoices from an out-of-state vendor, say 30,000 worth. And we don't know this yet, it's purely theory, but I can see a Department of Revenue doing it. Are they going to punch those names into the database? $30,000 transaction to the state, no tax on it, not registered, no year-end filing notice come through. Are they just going to begin sending out these fines as time progresses? We're not real sure on that, but it could happen. Rhode Island came out, $100,000 or 200 transactions. If you're over, you need to do all of these things. And the third one is particularly interesting, that's unique to them, is sending a letter after the sale to let them know. So they want it on the website, they want it on the invoice, they want you to mail a separate document afterwards, and then the 2 summaries. Do all of these things or collect their tax. Minimum fine, $10,000. Vermont, very similar to the Colorado ones. They just, smaller fines per transaction. Not so terrible. Now, Washington, I started out kind of showing their website and what they were looking for. So Washington, beginning of this year, said if you do over $10,000, you need to invoice language and the summaries. Minimum fine, $20,000. I'm still not sure how this is legal, but this is how they're doing it. And then they came out just a little bit later after Wayfair with a different ruling, but we'll just look at this. So beginning of the year, if you were under 10,000 in sales into Washington, you did nothing and you were okay. If you were over 10,000, we had the reporting schemes with the really high fines. That was our choice to make. And then October 1, Washington came out and they said, well, that's nice, but we're going to add this rule. And we're going to say, if you had over 100,000 in sales or 200 transactions into our state, you must register. Before, it was, if you're under 10,000, don't have to worry about it. If you're over 10,000, you have to make a choice. Do these things or collect our tax. Then on October, they modified it to, if you're over 10,000 to 99,999, you're allowed to make that choice. Collect our tax or do the reporting. If you mess up on the reporting, the fines are $20,000. They also then threw in on this October 1 deal, if you have over 200 transactions into our state, regardless of the dollar value, you need to register for our tax. Which brings us back to the timeline issues again. If I was playing the game correctly, I had $150,000 in transactions in the state. I was well over the 10. They didn't have an upper limit. I chose to do reporting, or maybe I'm going to choose to do my reporting very quickly here. I was okay. I just had to get my notices out to people and get the year-end reports done. Now they've come along and said, well, sir, you were at 150. You were well over our new threshold that says you must register and collect our tax. There is no more choice. If you make more than 200 sales or 100,000 in sales. So now we're stuck with, they have not said that the year-end reports are no longer due. That has not been said. We can only assume that they are still required. And if we think about this, as part of the registration in most states, they typically will ask you what sort, hey, how many dollars did you do in our state? You'll answer them honestly. You'll tell them 150,000. Great. So now you've registered for sales tax at the 150,000 level, and you're collecting going forward. You forgot to do the year-end reporting that was still required. They're going to have a list. They're going to look for names on it. If you didn't do the year-end reporting, and they can, I would not be surprised to see some invoices being issued by the states for just mandatory fines. So don't forget to do that year-end reporting if it applies to you. It could be very expensive for one piece of paper. The second catch to Washington B&O taxes is what they call their business and occupation tax. And this applies really even if you never go there. And it's about 0.5% of your gross sales in the state. It is one of the line items on a Washington sales tax return. They have a minimum threshold for it. It's $285,000. Or if it's 25% of your total sales. So if you are in Eden, South Dakota, and you ship a couple of combines to Washington that are newer, you're probably technically subject to their B&O tax. And depending upon your sales history, you are probably subject to the registration requirements. Don't forget about their business and occupation tax. The good news is it's about 0.5% of your gross. If you have smaller activities in Washington, it's not going to amount to a big ticket item. It's just something you have to take care of. Time for polling question number 3. I have never left my dealership in Eden, South Dakota, but I was on the phone and I traded a used combine to a dealer in Washington for a baler, and he gave me some cash. We even had a third party haul the machinery. None of us left home. Is it possible I could be subject to the Washington B&O tax? A lot of times we also encounter that a lot of tax preparers don't do the B&O return. Wow, perfect score. Gotta like it. A lot of tax preparers may not even ask about the Washington B&O tax because it's actually filed as part of your sales tax return. That is another good one. Oh, yes. And then, so we've talked about sales taxes quite a bit. States that now require you to register, states that give you a choice, all kinds of dollar values. But what about income taxes? Well, when you register for sales tax, you fill out the form, you answer all kinds of questions. Who you are, sales volume, probably some social security numbers of officers, all that gets answered. Well, there are some states out there that you can be subject to their income taxes just based on your gross receipts. They refer to it as an economic nexus. The number of states applying this economic level for a requirement to collect has been increasing over the past several years. The thing is, it's very possible that if you fill out that form, you're trying to do the right thing, you get registered to collect sales tax in a state. That form with your name and your sales information on it is going to one of these economic nexus states, you just now put the state on notice that you're doing business in their state. And if the state's any good at its data gathering, which most of them are, they're going to be looking to see if you file an income tax return in their state. So always consult with your tax preparer, financial advisor, whomever you're using, as part of this process of registering for sales tax in other states. There could be an income tax filing requirement as well that comes with this. Also, when you are registering for these sales taxes, don't be surprised if you get a questionnaire afterwards from the states that says, thank you for registering. Please tell us about your activities in the state for the last 4 or 5 years. Please sign this form under the penalty of perjury and send it back. What they're looking for there is to see if you had done anything in those states to create a physical presence in prior years. If you had, then they're likely going to send you an audit notice. One of the things that you need to consider before registering when you're looking at all these thresholds is, yes, sir, I am over the threshold in state X. However, it also turns out that I have an employee living there, or I have a territory representative making sales calls there, or my service truck was in that state repeatedly. I created physical nexus a long time ago. There are ways to get that straightened out with the state, but you have to do it before you register to collect their tax. So please kind of keep in mind when you're looking at thresholds, also think about, what have I done in the past? Do I have any outstanding liabilities out there that I should maybe take care of on the front side before registering for taxes? So earlier on, went pretty quickly through a whole big list of states and their thresholds. Well, I asked you not to remember it because it's kind of fluid yet. States are jumping on, states are changing their thresholds every so often. But if you go out to eidbailey.com and upper right where I've got that little arrow, there's a bit of a magnifying glass there. If you click on that magnifying glass, type in the word Wayfair into the search box, and there will be a featured result that pops up. States respond to the Supreme Court Wayfair decision. You follow that, it's going to take you to the article, and in the middle of the article there is a chart. That chart is live. We update it as soon as we hear about a change. It's been not quite as often lately. For a while there, it was twice a week. Expecting some more changes after the first of the year once the legislators get in session and tweak things. But if you search the Wayfair on eidbailey.com, follow the first one that comes up. This chart is live, and it will give you kind of a good starting point, what to look at. Polling question number 4. True or false? Is there updated and important information about state responses to Wayfair on eidbailey.com? Perfect score again. Yes. As you begin having these discussions internally, go out to eidbailey.com, take a look at that list, and see if you've crossed any of those thresholds. Also keep in mind about your prior activities, and if you have anything that you may have done in the past as far as creating sales tax nexus, having some exposure out there from prior activities, talk to someone about doing a voluntary disclosure and getting that ironed out before registering. Big warning, this is today. everything can change tomorrow. This isn't going away. I don't see that happening. It would be awfully tough for a congressman to try to vote this tax out of existence. But it is really easy for states to vote and say, well, we don't think 100,000 is low enough, and they begin lowering their thresholds because they see some other states are able to do it. There's already been a couple of states that have lowered their thresholds from the high $100,000 down to the $100,000 limit. It wouldn't surprise me if some of these change, but change towards more requirements to register. Again, before you register, talk to folks, see if you've done anything in those states that you maybe created a requirement to collect 3-4 years ago. And let's take a look at that, see if there's a way to do a voluntary disclosure agreement if needed, get some of those old liabilities cleaned up before you register to collect and go forward. Most states will not let you do a voluntary disclosure if you're already registered to collect their tax. The other upsides to doing one of these voluntary disclosures is you're in control. It's more on your time frame, and a lot of states will waive penalties. Some states will waive a bit of interest, and a few states will waive both the penalties and interest. There could be, which if they got you under audit, would not be waived. So there is some upsides to doing a voluntary disclosure agreement. The big one is you've got more control over it, when and how it happens. Now, if you're finding all this wayfare confusing, believe me, it is confusing. We've got a form that is a sales by state. I'm asking you to where you would input your sales by state, your number of invoices by state. You're gonna answer some super basic questions about your sales activities, where you're filing. We take that, we come back with a kind of a summary chart saying, you've crossed the thresholds in these states. We believe you need to register here. Some of them we may look at and go, you're really close. You probably want to register anyway. We've got includes some more links to the reporting information for some of those states. And it includes like a 1-hour follow-up delivery call. We're doing this flat rated $500 if it's a way to help spread the word and get people in compliance and hopefully keep everybody out of trouble. This is about what the form will come back looking like. It'll be populated with numbers and decisions, but it's a nice easy chart to work your way through. And do we have any questions out there or time for a couple of questions?
Yes to both.
Okay.
So we had a few come in. Let's see here. The first question is, if we trip the threshold, do we pay sales use tax on the next sale, or is there a catch-up for all of these sales?
Of course, every state varies, but the pattern has been if you first they look at what last calendar year was. If you didn't trip it there and it's a good season and you trip it in this year, typically they're giving 30 or 60 days, and then they want you to be registered and start collecting. So if you trip it in, let's say June 1, you do not have to worry about sales tax on any of the previous tickets, or even on the ticket that tripped you over. They're looking at, we'll give you 30 or 60 days. By that date, you need to be registered and going forward. The other question that sometimes comes with this one is, if I tripped it last year, so I start registered and collect this year, but I didn't exceed the threshold this year, do I have to stay registered and collect? The best way to think of this registering for sales tax is it's a tattoo. It's just about impossible to get rid of. Once you register for tax in a state, unless you have a couple of years of absolute zero sales there, you're expected to remain registered.
If I ship to a customer in my home state of Utah, but the customer's headquarters is in another state, let's say Colorado, and the invoices go to Colorado and I trip the threshold, do I report to Colorado even though the parts never left my state?
Ah, good question. The sale is typically considered where you delivered it. If you're in Utah, you're shipping into Utah, the box is delivered in Utah, and you're just mailing the bill for payment to a headquarters in another state, it's all going to be a Utah sale. They're just processing the payment out of state.
Any info on Wyoming? These taxes are all for selling to end users, not wholesale, correct?
I believe Wyoming had a law that was out there, and then they basically pulled it back for further review. I don't know that Wyoming has posted anything new recently. Wyoming is kind of in a limbo as far as sales into Wyoming. I would say 99% of the states are just stating in their statutes gross sales. So one example I had is if you're a manufacturer who never leaves home, you're shipping all over the country, you've crossed a lot of thresholds, but you're selling to Walmart, Dick's Sporting Goods, resellers, people who are exempt, wholesalers. Those numbers count towards that threshold. Where this becomes really important is some manufacturers also like to have buy direct from the company websites where they'll sell to end users like you and me. So I'm sitting in Fargo, North Dakota, if our imaginary manufacturer has shipped a whole bunch of sales to a reseller here, those numbers count towards the threshold in North Dakota. If you've gone over the threshold and you sell to an end user like myself, then you are expected to collect sales tax on the sales to the end users.
All right, so that's all the questions so far.
Okay. Well, it's been great fun, everybody. If you have any questions, shoot them off and we'll see if we can get through them. We'll go from there. Thank you, everybody, for coming.